Joints on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
All right, ladies and gentlemen. Oh, we're going to have a special watch list. Hey! Okay, is this weird? Okay, this is going to be... I just wanted to do... All right, let me set the camera up. All right, what's up? Okay, that was probably some of you... All right, if you think it's really weird, I mean, yeah, anyways. But I wanted to see you, Chad. I wanted to say what's up to you guys, and I do want to talk about how the next recession is going to play out. Again, it's Thursday. I am going to give you guys an update on wheat, W-E-A-T. So if you have any questions with that play, I mean, drop them here below. But I do have a video for you tomorrow that we are going to be going over. We're going to talk about that play, a lot of that. And then we're going to talk a little bit about what happened. Again, you might be used to the watch list. Shout out the watch list gang. I appreciate all of you guys. Again, everybody on the stream. I mean, just shout out to Cole, bro. It gets me really excited. So I want to talk about the recession, but we're also going to talk about what happened today. I mean, at the end of the day, today was very simple in the sense there was not any more escalation. And that's what kind of has the market on edge here. Everybody's waiting for it. You have the commodities going down. I'm going to talk about my little prediction here. I'll give it to you in a mini one. And then you had the CPI, and that was the big deal of the day. But it did not go insane. And that's what kind of has some people excited. Some people feel a certain way about it. But the question is now the next CPI. Again, they're blaming the gas price. We could talk about it. But that was it. It was not enough to really move the market. We actually went down. It was a pretty average response if we look at the ECMI. But end of the day here, we're going to get more about it, and we'll talk about it. As far as even the plays, I'll give it to you right now. I made a put on Coca-Cola, and I made a play on Oracle. Here, let me get the stream alerts. All right, I bought one Coca-Cola March 18th 56 put for 45 cents, spent $45 shorter term. Again, next coming days here, I'm going to be looking at those food plays. Definitely keep your eye on it. Again, we are all waiting for escalation, so keep that in mind. Then I sold my Baba put, that old $100 put. I got $800 for it, so not too bad. And then I bought two Oracles, April 14th, 95 calls. It was for the TikTok news. Spent 32 cents a pop, so $64 total. But they had earnings and then they got clapped. So we'll see as far as even plays for tomorrow. All right, the camera tripped out. I didn't want to like restart it. I'm moving around, get in the office. But as far as tomorrow, I'm going to be watching the Coca-Cola plays. I really, really like those. I did keep it small for a reason. The premiums are in that up and down range, again, with all the volatility like we've been talking about. So watching that one. Then there's EXC, the nuclear or the uranium plays. I still like them. They moved up a lot in the morning, then chilled out. But I think that one's going to be an interesting one. I think we need the commodities to keep going. And then I'm going to be watching Caterpillar on the upside. I really like it. It was already doing a lot today. So I got pretty excited with that one. So those are the plays. There's all that. Even like I said, we're going to talk about wheat. A lot of people ask me about oil. Pretty much, I think for the next 6 to 7 days, it could possibly hit another low, but it's definitely not going to go higher. And then it'll level out for another like 7 days. Again, I'm using the old Omicron pattern, but I'm still holding all those plays. I still think oil and the commodities. Today we got a break, but don't forget, again, CPI and all that, even the Fed futures, this is all going to be about Powell moving forward. So there's all that. And now let's talk about the recession. I don't know if you guys remember, I've done videos like this in the past, just like sitting, talking to you guys, explaining some stuff. But I mean, a lot of people keep asking, is there going to be a recession? And a big answer I had was if the commodity prices stay elevated. Now, regardless of the reason, I think people need to get associated a little bit with the timing. Essentially, recessions do not just happen. They are not like COVID or a war with Ukraine. It doesn't just kind of pop up in the sense that it would take a couple of steps. And that's where I'm saying if prices do stay high, if your gasoline keeps going through the roof and people have all of these issues, you may see stuff develop down the line, but it would take 12 months. But this is really what I simply want to say. Watch the yield curve. And this is why Powell in the next coming days is going to be so important, but it has to do with the yield curve. Essentially, how a recession is going to look like. Again, how I think here in modern times too, and how it would play out kind of like how it did in the past. Essentially, we'll see earnings and stuff like that, and that's where we're going to keep our eye on as that starts to flip. That will come in like the second half, but initially, rates start going up. You're going to start hearing about a yield curve, and you're going to hear about it inverting, and then people are going to say the yield curve isn't is inverted, we have a recession. Well, yes and no. And this is what I'm trying to say, because pretty much the first half of the recession is going to look like people freaking out about a recession. They're going to bring up the yield curve, and then you might start seeing growth really start to slow down and things chill out. But you may also see things go up again, like 2007 to 2008, 2009, bro, everything was going up. Real estate, stocks, you can name it. So keep this in mind. But what I'm trying to say is that this will be the first wave, and then as things go up, some people are going to be 50-50. You'll get more of this split. The investor certainty or conviction is going to be, again, it'll be volatile. But at the end of the day, what's eventually going to happen is once that yield curve starts coming back to normal, and then the Fed starts cutting, and then people are going to go from, well, we recession this and that. We know everything was stable, and now it's not stable. But then we know the yield curve, everything's good. Again, they're going to say a lot of stuff until the point the Fed hits the button, they cut the rates. People are going to start saying, oh, well, now the Fed needs this to ease. We're definitely in weakening. And that right there, that will be a recession signal. And then you'll have a dip and freaking out. And then a couple months, maybe a year later, it starts to come back up. But what I'm trying to tell you is that a recession is going to take 12 months. And this is why people are worried about commodities right now. This is why we are talking about wheat plays. This is why we're bringing up oil. Again, the price of oil. This is very, very historic. I cannot stress this enough. Believe me, I know I've said it a lot, but at the end of the day now, the commodities are pretty much the last one to go. And once you start getting the commodities going up, affecting cost, inputs, and we're already talking about slowing growth, even though our rates are very low and all of this, this is what makes this scenario so unique and more challenging, more or less. But simple fact, when the commodities start go crazy, it's time to pay attention. And if they stay elevated and stay crazy, I don't know if you remember in 2021, the beginning, I think even Kathy Wood, when oil was hitting $70 and $80, people were like, yo, that's high. Oh my gosh, oil, because that was them getting early. And like I'm saying, imagine a recession. Imagine how slow even some things are. That's why I'm saying it would take 12 months. So I want you all to keep this in mind, but pay attention to the commodities and where they go from now. This has led into a lot of different, crash cycles. You usually start to see the commodities go crazy. And that's why now, if these stay elevated over these next few months, but again, really the next year, that's what's going to determine it. So essentially right now with March, how things are, I think there'll be a lot of stuff happening with the war. Again, you have Powell and all that. But if you're going to see a recession, honestly, it may not really, you won't really feel it probably, or you won't see it in the stock market probably until 2023. So keep this in mind. I hope this helps you guys. If you have any questions, and again, I'm sure the next question will be, what am I going to do in a recession? Well, we're just going to save our money and keep stacking up. Will I be buying stocks in the long term? Probably, but as you saw over the last couple of weeks and months, there's no problem. I could wait a quarter, maybe even 2 quarters stacking cash. So like I'm trying to say, if you're on a long-term investment time horizon, you've been in the market again, I don't know if 3 months is like short, but not really. And then you see how quickly we could get ahead of things. So 12 months of time, 12 deposits, or depending on if you're going quarter by quarter, I mean, things could come and go very quickly. And that's what I'm saying. Real estate, I'm pretty much going to be buying real estate all the way until the first hike. Maybe even then the second hike, we start thinking about slowing down. But that's what I'm talking about. Even with the yield curve, again, I would probably still be buying or holding a lot of real estate while the curve is flattened. But then as we get closer, if that curve and it flattens or inverts, and then it turns into them cutting rates aggressively, I would sell a lot of different things. So we'll talk about it if you have any questions. But again, is this something to be afraid of? No. And that's why I wanted to make this video. I know it's the weekend, or we're getting into it. We have a lot to talk about today. Even though the market has been crazy, it wasn't that crazy. A lot of the plays, we're already in them. We're not moving around too much. Again, focusing a lot on that wheat. So I thought I would talk about this, but we've been talking a lot about timing. Again, even with the wheat play, a lot of time matters come to play into this. So I think a lot of people, even if they get worried or not, just imagine though, even from like October, even a year ago, I mean, just think about it. It's been even 1 year since a lot of people said, well, the real estate market was too high. It's been 1 year when you thought like certain things, you're like, oh, wow, I'll never be able to get it cheaper. Then sure enough, it's like everything is cheaper is crazy. So don't underestimate how long a year of time is. I mean, you have to deal with it every day, but that's what I'm trying to say on the day-to-day to handle yourself as an investor. I hope you keep some of the broader, even midterm stuff alive, and don't get so scared when you hear stuff. Again, recessions, you can look at a lot of different things, and we will go over it here on this channel if it ever does come to that. So we will see what happens. I hope this helps, Chad. Let me know, and get ready for the video tomorrow. You're going to like it.